Hello, my dear friends. I'm sure you all are doing fine and doing good. Shiva Teja is back again in front of you with an interesting video. In fact, in this particular video, I actually want to revise the concept of a very small topic which student always have a sense of thought whether this topic will come in exam or it will not come in exam. And sometimes students keep thinking if it comes, what to answer, what not to answer. Yes, my dear friends, we are going to talk about a very small interesting topic known as FTP, that is foreign trade policy. So in this particular video, in a very short span of time, I want to revise the complete foreign trade policy, especially from an examination standpoint as to what will come in the exam. Generally, it has been so very common practice that FTP is coming in exam sometimes for 4 marks. There is also a possibility that FTP may come in exam for 6 marks. All said and done, FTP can come in exam only for 2 marks also. How many ever marks it is coming, generally FTP keeps coming in exam all the time. And there is one such topic which I feel so sad that students keep leaving this topic in choice. But I really don't want you to leave this topic in choice because this topic is actually very scoring. If you just spend little bit time, your FTP is done. In fact, in this video, I just want to revise FTP. This video is all about a revision lecture on foreign trade policy where we'll get a complete clarity of thought on what is foreign trade policy. Very helpful. Just before exam, watch this short, cute and sweet video on foreign trade policy which will give you a complete insight about FTP, how it will come in the exam, what kind of questions can come. Clear? So let's spend a little bit time and close this beautiful topic called foreign trade policy. Come on. So first of all, guys, we are actually going to do revision on foreign trade policy. Students keep thinking that this is very theory topic, very boring topic. But let me tell you, in reality, this is one of the most practical topic where a lot of export incentives and export benefits are given to the exporters. This is one such area which is actually very practical. But it looks like theoretical topic, but actually very practical. Now, the interesting point is that practically we have got one authority known as DGFT, which stands for Director General of Foreign Trade. That is a regulatory body which gives everything related to the foreign trade policy. Now, when I say foreign trade policy, what does foreign trade policy mean? Foreign trade policy basically talks about how the procedures are there in foreign trade policy, how do we deal with the foreign trade policy, and what exactly happens in foreign trade policy. Especially we are talking about what are the export incentives or the benefits which are actually given to a particular exporter or to particular importer, and prima facie the benefits are given to the exporter. Because if you look at from the government standpoint, government is actively engaged in order to encourage the exports. They actively discourage imports, but they actively encourage exports. The reason being very clear that the more exports you do, the more foreign currency come into India. And the more foreign currency comes to India, government is extremely delighted and extremely happy. Because the more exports we do, the more foreign currency come. And the gap between Indian currency and foreign currency will come down. That's what we want. That is why government keeps giving a lot of export benefit. And we have got some schemes known as SCIS, which stands for Service Export from India scheme, and we have got one scheme known as MEIS, which stands for Merchandise Export from India scheme. Like this, there are some schemes in foreign trade policy which gives a benefit in terms of exports what you do. Based on the value of exports what you do, you are given something known as scrip. I repeat one more time, they are given something known as scrip. Based on net free foreign exchange, they are given a scrip. And this scrip is like a coupon or a voucher which can be easily sold in the market. Now, how much scrip they'll give, how they will give, what is the procedure, we'll talk in detail, don't worry. And then we have got some more schemes known as Advance Authorization. Come on, what is the scheme name? Advance Authorization. Other one, there is something known as DFIA, which stands for Duty Free Import Authorization. Now, what is the logic behind this point? Sir, let's say, for example, Shiva Teja is a manufacturer of shirts. Shiva Teja is manufacturer of what? Shirts. And I'm manufacturing shirts in India. And whatever shirts I'm manufacturing in India, I'm going to export that shirts. I repeat, whatever shirts Shivateja is manufacturing in India, that shirt Shivateja is basically going to export that shirts. Clear? So whatever shirts are manufactured by Shivateja in India, Shivateja is going to export that shirt. Now, for the purpose of manufacture of shirts, Shivateja requires obviously certain raw materials for manufacture of that shirts. And what I have done is that for manufacture of that shirts, whatever raw material is required, I did not procure domestically. I wanted to import that raw material, and I imported that raw material from foreign country. And we know the fact that whenever we import certain goods, we are required to pay the customs duty. And there is something called BCD, basic customs duty, plus SWS, social welfare surcharge, plus IGST, integrated GST. This is all we are required to pay. But when we are basically engaged in manufacture of goods for the purpose of export, then we can go for obtaining any of these licenses such as advance authorization or duty-free import authorization, so that we can import the raw materials or the goods required for manufacture of shirts. We can import the goods without payment of customs duty. Such a very practical concept, guys. But there are certain differences between advance authorization, and there are also some differences between duty-free import authorization. What is that? We'll discuss. Don't worry. Clear, right? So we have got some schemes like SEIS, MEIS, and we also have got advance authorization, duty-free import authorization. And there is one more fantastic scheme known as EPCG, which stands for Export Promotion Capital Goods. The fundamental difference is that advance authorization or duty-free import authorization is for importing raw material without payment of customs duty. And EPCG license stands for Export Promotion Capital Goods, through which we can import the capital goods without payment of customs duty. And this facility is being given because whatever capital good or the machine we imported, we are going to use it for manufacture of the goods which are going to be exported. That is why they brought this concept called EPCG, which stands for Export Promotion Capital Goods. All these are like schemes or licenses for promoting export benefits. And based on the exports being done, they are given some status known as 1-star, 2-star, 3-star export house, and they are technically called as status holders. Now, who are these status holders and when are they given this status? This is also important concepts. So these are the major interesting concepts what they test and question in the foreign trade policy, my dear friends. Now, what I covered in this, let's talk. Are we ready? Good. Come on, let's proceed. So friends, this is your favorite website. Of course, ICA website. In that, I'm opening the ICA module only because when it comes to foreign trade policy, ICA material is one of the best thing to learn. And there are two units here. Number 1, Introduction to FTP. Number 2, Basic Concepts relating to Export Promotion Scheme. Once let me open Introduction to FTP topic. In this, let me highlight to you the important areas, sir. Hold on for a minute, please. Yeah. Fine. See here, legislation governing foreign trade. That line is very important. One multiple choice question can come. In India, Ministry of Commerce and Industry governs the affairs relating to promotion and regulation of what? Foreign trade. And the main legislation concerning foreign trade is the Foreign Trade Development and Regulation Act 1992. I repeat one more time. The main legislation or the main act related to the foreign trade is Foreign Trade Development and Regulation Act. Sir, please don't think that FTP, Foreign Trade Policy, is an act. FTP is only a policy which is drawn by the government every 5 years once. And the latest FTP going on is 2015 to 2020. So technically that FTP was supposed to end on 31st March 2020. But considering the COVID effect or the Corona effect, they have extended the Foreign Trade Policy 2015 to 2020 by one more year. Other words, all the benefits and schemes under foreign trade policy, that is existing foreign trade policy, will end by 31st March 2021. So technically it was supposed to end by 31st March 2020, but they extended that foreign trade policy by one more year. That is up to 31st March 2021. But FTP is not an act, it is only a policy. But the FTP is governed by Foreign Trade Development and Regulation Act 1992. Next line. As per provisions of the Act, government may make provisions for facilitating and controlling foreign trade. It may prohibit, restrict and regulate exports and imports in all or in specified cases, as well as subject them to exemption. So let me tell you, whenever we import the goods, there are three kinds of goods. I repeat one more time. Whenever we import the goods, my dear friends, there are three kinds of goods, sir. Number one, prohibited. Number two, restricted. Number three, free. These are the three kinds of goods what we can import. When I say prohibited, that means we are talking about those goods which cannot be imported. Example, arms and ammunition, guns. These things we can't import at all. They are regarded as prohibited goods. Second one, restricted goods. So restricted goods means those goods which can be imported but only upon obtaining permission from DGFT, Director General of Foreign Trade. Practically, they have notified some authorities known as STS, which stands for State Trading Enterprises. And there are some goods which you can import, but you can import only through State Trading Enterprises. So first category is what? Prohibited. Prohibited means those goods which you cannot import at all. Second, restricted. Restricted means those goods which can be imported, but they are subject to restriction. Last one, free. Free is those goods which can be happily imported. You need not take anyone's permission. You can happily import without any restriction, without any condition. So these are the three categories of goods. How do we bifurcate when we are talking about the import of goods? It can be prohibited, it can be restricted, or it can be free. Next, going back. Is authorized to formulate and announce an export and import policy and also amend the same from time to time by notification in the official gazette. And last, fourth point, that's very important, is also authorized to appoint a Director General of Foreign Trade, that's what I told you, DGFT, for the purpose of the Act, including formulation and implementation of export-import policy, in short known as EXIM policy. Once upon a time, this was not known as FTP, it was known as EXIM, export-import policy, but now it is technically known as FTP, which stands for Foreign Trade Policy. Now I want you to look at what are the features of foreign trade policy. A question can come in exam for 2 marks. Let's see. Export-import of goods and services is generally free unless regulated by the provisions of the policy or any other law for time being in force. Second point, very, very important. Export and import goods are broadly categorized as free, restricted, prohibited. Next point, interesting. Some goods are free for import and export but can be imported or exported only through state trading enterprises. There are restrictions on imports, exports and imports for various strategic, health, defense, that's what I told, arms and ammunition, environment and other reasons. If goods are restricted for import or export but not prohibited, government can give a permission or a license for specific reasons. Then exports are promoted through various promotional schemes, that's what I told you, MEIS, SCIS, advance authorization, duty-free import authorization, like this we have got schemes. Then goods and services are to be exported and not taxes, obviously. Hence, the taxes on exports are either exempted or adjusted or refunded on both outputs and inputs through schemes of duty exemption, duty refund, drawbacks and rebate. In fact, there is one separate topic in customs known as duty drawback dealt by section 74, 75, 75A and 76. 74 talks about drawback in case where imported goods are exported, either without use or after use. But the point is that same good what you imported, the same good is exported. Other one is section 75, you imported some raw materials, used it for manufacture of finished goods and then finished good is exported. Imported goods, exported goods, both are different. Next one, capital goods can be imported at nil duty for the purpose of exports under the scheme of EPCG. What is EPCG? export promotion capital goods. That's what I told you. Then, for units undertaken to export all their production, 100% exports, there are special schemes so that they can avoid taxes at every stage under the scheme of EOU or SEZ. EOU stands for export oriented unit, SEZ stands for special economic zone. Next point. In certain cases, imports get duty exemption or concession for certain special purposes. In such cases, to enable the domestic suppliers to compete with international suppliers, supplies of domestic suppliers are treated as deemed exports. What exports? Deemed exports. Practical example for deemed export, my dear friends. Let's say there is a EOU. EOU stands for export oriented unit. They are engaged in completely doing exports, obviously. Now let's say there is one person, Mr. Ramesh. Ramesh is supplying goods to export oriented unit. What is he supplying, my dear friends? He is supplying goods to export oriented unit. This is regarded as deemed export. This is regarded as what, my dear friends? Deemed export. Or there could be a case where there is one person, Mr. A, who is a EPCG license holder. What holder? EPCG license holder. And there is one person, Mr. Ramesh, who is supplying to Mr. A. This is also regarded as deemed export. So generally deemed exports, in simple terms, if we are supplying to an exporter, it is regarded as deemed export in simple language. But let me tell you, let me show you an interesting thing. Sir, this document is a compilation of all the past exam questions, and let me show you that couple of times question has come in exam. What are all covered in deemed exports? Hold on. Let me show here. You can see here at the end, there is one question. Question number 13 I am looking at. List some supplies which are regarded as deemed exports for the purpose of benefits under foreign trade policy. So they are basically asking what are all covered under deemed exports. Let me discuss the answer so that this concept will be over. See here, as per FTP 2015 to 2020, that's what I told you already, following are treated as deemed exports. Number 1, supplies against advance authorization or duty-free import authorization. That means we are making supplies to advance authorization holder, or we are making supplies to duty-free import authorization holder. Then that supply is regarded as deemed export. Second, very popular, supplies to EOU or STP or EHTP or BTP. EOU stands for export oriented unit, STP is software technology park, EHTP electronic hardware technology park, BTP biotechnology park. If you are supplying to them, then that is also regarded as deemed export. Then supplies against EPCG authorization, already I gave an example. If we are making supplies to a EPCG license holder, that is also regarded as deemed export. Next point, supply of marine freight containers by 100% EOU, export oriented unit. Then supplies to projects against international competitive bidding. If you are supplying to projects in relation to international competitive bidding, some foreign projects, then also it is regarded as deemed export. Then supplies to projects where imports are permitted at zero customs duty. Next point, supply to mega power project. Next one, very popular, supplies to UN or international organization for their official use. And last one, supplies to nuclear projects. These are all covered under categories of what is regarded as deemed export. A question can come in exam for 4 marks. Write any 4 to 5 points, you will get your marks. So that is about the concept of what are covered under the concept of deemed exports. So just write 4 5 points, you'll get your marks. So what is covered here? Supplies against advance authorization or DFIA, supplies to EOU, STP, HTP, BTP, EPCG authorization, UN international organization, projects against competitive bidding, and supplies to nuclear projects. Remember these points, you will get your marks. Then, going back to the discussion. This point already we discussed about what are the salient features of a foreign trade policy. Guiding principles is fine. They will not play with you on this point. And I'm sure you know about the concept of IEC, which stands for Import Export Code. That's a unique 10-digit code. In fact, practically the PAN itself will become an IEC. It's an IEC, Import Export Code, which is the mandatory document for import or export of goods. And without that, we can't do import or export. Yeah. This is what I actually wanted to discuss with you, sir. Small concept, but high possibility that multiple choice question can come. I wanted to look at the second point, second-hand goods. See that import of second-hand capital goods, including refurbished, reconditioned, spares, shall be allowed freely. However, second-hand personal computers or laptops, photocopier machines, that is Xerox machines, air conditioner, diesel generating set will only be allowed against authorization. That means you should take permission and only then you can import. Then second-hand goods, except second-hand capital goods, shall be restricted for imports and may be imported only against authorization. So any small multiple choice question can come or a 2 marks question can come on this point. Sir, every mark will count. We all know that 59 is different, 60 is different, and it's not 1 mark. It is 6 months of career. No games at all. Come on. Next, fourth bit is very important again. Import of gifts and samples, extremely very important point. Please see that import of gifts shall be permitted where such goods are otherwise freely importable. So if it is freely importable, you can import gift also. And in other cases, a customs clearance permit. So if the goods are not freely importable, you are required to obtain customs clearance permit from DGFT, which stands for Director General of Foreign Trade. Further, import of samples shall be governed by the prescribed procedure. Authorization for import of samples is required only in case of vegetable seeds, bees, and new drugs. I repeat one more time. Authorization for import of samples is required only in case of vegetable seeds, bees, and new drugs. Then, samples of tea up to 2000 rupees CIF. CIF is nothing but cost insurance freight per consignment will be allowed without authorization. That means even without authorization, you can import that. And samples up to 3 lakhs can be imported by all exporters without paying duty. Such a brilliant point actually. Sir, expect a multiple choice question on this. No games at all, please. Then these are the interesting points in our first area. But let me discuss with you all the schemes also for some time. This is my material which I gave you during the sessions. Let me open the schemes. And just now I discussed about all this point. Personal computers, laptop, they are restricted if it is second-hand goods. Yes. Let's start the first discussion. Come on, we're talking about what schemes? duty exemption scheme. The first scheme is called Advanced Authorization Scheme. In short, we call it as AA, Advanced Authorization Scheme. Under Advanced Authorization Scheme, inputs means nothing but the raw materials which are used in the export product can be imported without payment of customs duty. So the raw materials which you use for the purpose of manufacturing the export goods, that you can import without payment of customs duty. For example, I told you that Shivateja is manufacturer of shirts, and the shirts what I manufacture, I'll export, and whatever raw material I require for manufacture of the shirts, I'm importing. Now on that raw material, I can happily import without payment of customs duty. Next, the goods are exempt from basic customs duty. So exemption is only with respect to basic customs duty, additional customs duty, education cess, anti-dumping duty, and also what duty? Safeguard duty. So net effect, all the duties are exempt. Next, condition for duty-free imports against physical exports are provided in the notification issued under customs law. Next point, very important. Advance authorization shall be valid for 12 months from the date of issue of such authorization. From when they have given, from that period within 12 months, it is valid. Advance authorization for deemed export shall be coterminous. Coterminous means it will combine with the contracted duration of the project execution or 12 months from the date of issue of authorization, whichever is more. Next point, very important. Period of fulfillment of export obligation. What is export obligation? When they have given you imports without payment of duty, then obviously they'll put some condition that we want you to do some exports, and that obligation you have to fulfill within 18 months from the date of issue of authorization. That's very important condition. And export proceeds shall be realized in freely convertible foreign currency. Next slide. Advance authorization is on the basis of SION, and SION stands for Standard Input Output Norms. When I say Standard Input Output Norms, law has specified that for this much input, this much output should come. For example, if you have to manufacture 10 shirts, how much raw material is required? That's called Standard Input Output Norms. Then, advance authorization is issued for inputs in relation to the resultant products based on the SION. If SION for a particular item is not fixed, very important line, advance authorization can be issued by RA, which stands for Regional Authority, based on self-declaration by applicant. Applicant can make a self-declaration and he can obtain advance authorization. Next, items which can be imported against duty-free authorization, inputs which are physically incorporated in export product, then fuel, oil, catalyst which are consumed or utilized to obtain export product, mandatory spares which are required to be exported or supplied with the resultant product, permitted up to 10% of the CIF value of authorization. Next, specified spices only when used for activities like crushing, grinding, sterilization or manufacture of oils or oleoresins, and not for simply cleaning, grading or repacking. It's not for cleaning, grading or repacking. It's used for crushing, grinding or sterilization. However, items reserved for imports by STs, state trading enterprises, cannot be imported against advance authorization. Next point, very important, actual user condition. That means this license, whatever is you have, it is to be used by you only. You cannot transfer the license. And they used one word, it will not be transferable even after completion of obligation. Even after you fulfill export obligation, you can't transfer the license. Clear? Who are eligible for authorization? It's eligible for both manufacturer exporter, that means who is manufacturing and exporting, and merchant exporter, who is a trader, but who is tied to a supporting manufacturer. That's very important. Then, holder of advance authorization has an option to procure the materials or inputs from indigenous manufacturers, that means locally also. That's also possible. Then, Advance authorization can be issued for annual requirement also. And such authorization shall be issued for items specified in CION and is not available on self-declaration basis. So if you want annual advance authorization, then it is not available on self-declaration basis. And exporters having past export performance in at least 2 preceding financial years shall be entitled for advance authorization for annual requirement. So if in at least last 2 years you have done exports, only then you will get this benefit. And entitlement is CIF value shall be up to 300% of FOB value of exports or 1 crore, whichever is higher. And there should be a value addition, my dear friends. And the value addition is 15%. And for T, it is 50%. When I say value addition, for example, if import price is 1 lakh, then export value should be at least 1,15,000. We want export value should be at least 15% more than import value. And in case of T, the value addition required is 50%. Such a powerful point. Next, duty-free import authorization. This is also like advance authorization only, subject to some small changes. Provisions applicable to advance authorization are broadly applicable for a DFIA. But one important point is that these authorizations shall be issued only for the products for which CION has been notified. If CION is not notified, then we can't obtain the license of DFIA. And authorization is allowed for duty-free import of inputs. And one crazy point is that the goods are exempt only from basic customs duty. There we learnt about BCD, social welfare surcharge, and we discussed about safeguard duty. All duties were exempt, but here it's only on basic customs duty. Then DFIA shall be issued on post-export basis. After you export, then you will get the benefit, which you can use it for future exports, not for present exports. The applicant shall file an online application to regional authority and export should be completed within 12 months. That's very important. And after completion of export and realization of export proceeds, request for issuance of transferable DFIA may be made within a period of 12 months from the date of export or 6 months from the date of realization of export proceeds, whichever is later. And the DFIA has got validity period of 12 months, my dear friends. And no DFIA shall be issued for an export product where CION prescribes actual user condition. So friends, and value addition is a very important point, wherein value addition they told in the law as 20%. In case of advance authorization, it is 15%, and for DFIA, it is 20%. And let me discuss with you. 1-2 times an interesting question came in the exam, which is like this. Hold on. Yeah. So like this, my dear friends, they ask question, what are the differences between advance authorization and duty-free import authorization? Like this question came in exam lot of times for 4 marks, where they asked about what is the difference between advance authorization and duty-free import authorization. See once, come on. In both DFIA and advance authorization scheme, import of inputs, oil, catalyst, which are required for export products are permitted without payment of customs duty. But the interesting difference what you have to observe there is, number 1, advance authorization is not transferable, boss. You can't give it to somebody. But duty-free import authorization is transferable, but subject to the point that only after export obligation is fulfilled. You can transfer a DFIA, but subject to the condition that only after export obligation is fulfilled. Second, advance authorization scheme requires 15% value addition, but in DFIA, value addition is 20%. And the third difference, advance authorization scheme is available to gems and jewelry sector, but not DFIA is not available to the said sector. So for gems and jewelry, we can take advance authorization, but we can't take DFIA. Next point, very important difference. DFIA cannot be issued where CION prescribes actual user condition. as the material is transferable after fulfillment of export obligation. After fulfillment of obligation, we can sell that material. So DFIA we cannot be issued where CION prescribes actual user condition. And finally, advance authorization can be issued even if CION is not fixed, but DFIA can be issued only if CION has been fixed. CION stands for Standard Input Output Norms. So like this, one question can come in the exam. What is the difference between duty-free import authorization and advance authorization? An interesting kind of question. No games at all. Clear? Good. Going back. So what is the value addition, guys? In case of advance authorization, 15%, and for T 50%, and in DFIA it is 20%. And in case where CION is not fixed, we can still go for advance authorization, but we can't go for a DFIA. And advance authorization is available for gems and jewelry sector, but DFIA is not available for gems and jewelry sector. Keep these points in mind. Major differences. Then, duty remission schemes. In this, I want to talk about MEIS, most important concept. Come on, what is the scheme name? MEIS, Merchandise Export from India scheme. So based on the value of exports, what they do, they get some reward. And this reward is in the form of a scrip, my dear friends. And this scrip can be sold in market easily. Other words, for example, guys, if Shivateja is doing extreme exports of goods, and based on the value of exports, what I am doing, I'll get some reward. That is generally 3% or 5% of FOB value. And that is a scrip or coupon. And that coupon or scrip, what I can do is, I can use that coupon or scrip for the purpose of payment of customs duty on imports, what I do. On imports, what I do, I can use that scrip for payment of customs duty. And there is also a possibility that I am not doing any imports. In that case, what law told is that, whatever scrip you have got, that scrip you can easily sell in the market. So that scrip can be used for the purpose of payment of customs duty, or that scrip can be sold in the market. You can use it for payment of customs duty, or you can sell that scrip in the market. Anything can be done. Extreme benefit given for goods as well as services. For goods, the scheme name is MEIS, and for services, the scheme name is SCIS. But that is subject to certain conditions. What is that? We'll see now. So friends, come on, let's finish off discussion about the concept of MEIS as well as SCIS scheme. Come on, as I told you already, MEIS is in case of goods and SCIS is in case of services. And based on the value of exports, what we have done, and net free foreign exchange, what we brought into India, we get a scrip. And scrip is like a coupon or voucher which can be used for the purpose of payment of customs duty on the imports what we make. And by any chance, if we are not making imports, then that scrip what we have got, that scrip can be easily sold in the market. Otherwise, the scrip is freely tradable. Very interesting line. Clear? Come on guys, let's complete the discussion. First, the objective of MEIS is to compensate infrastructural inefficiencies and associate cost involved in export of goods or products which are produced or manufactured in India, especially goods having high export intensity, employment potential, and thereby enhancing India's export competitiveness. Such a brilliant point actually. So what is the idea behind all this? It's basically for goods which are produced or manufactured in India, especially goods having high export intensity, employment potential, and thereby enhancing India's export competitiveness. Right? Come on. Let's look at what is the reward under MEIS. Reward is nothing but the scrip. It's not script guys, it is scrip. See now. Under MEIS, export of notified goods or products to notified markets shall be eligible for reward at specified rate. And unless otherwise specified, the basis of calculation of reward would be on realized FOB value of exports in free foreign exchange. That means what we realized, or on FOB value of exports as given in shipping bill in free foreign exchange, whichever is less. That means whatever we declared in the shipping bill or what we realized in free foreign exchange, both of that, whichever is less. I repeat one more time. Basis for calculation of reward is what, my dear friends? Realized FOB value of exports or FOB value mentioned in the shipping bill, whichever is lower. Next, my dear friends, important point. This question also came in exam 2-3 times for 4 marks. What are the ineligible categories under MEIS? Number 1, EOUs, EHTP, BTPs or STP who are availing direct tax benefits or exemption. Next point, very important. Supplies made from DTA units to SCZ unit. DTA stands for domestic tariff area, the normal local area. If that unit is supplying to SCZ unit, then there is no question of MEIS. Next. Exports through transshipment. What is transshipment? Exports that are originating in third country but transshipped through India. That means, for example, goods are imported from US and the same goods are being sent to Australia, originated in US and being sent to Australia, but they are only transited through India. In that case, you can't avail MEIS benefit. Deemed exports, then SCZ, EOU or EHTP, BTP, FTWZ, it's free trade and warehousing zone, products exported through DTA units. Next point, export products which are subject to minimum export price or export duty. If there is something called minimum export price or export duty, then MEIS will not apply. Then ores example, iron ore. Sir, iron ore is a mineral, iron is a metal. Come on, ores and concentrate of all types and in all formation. Then cereals of all types, sugar of all types, crude, petroleum oil and crude, primary and base products of all types and all formulations. Next line, export of milk and milk products and meat products. Finally, service export. So these are the categories which are not eligible for MEIS benefit. This point came in exam so many times. Next point. In case of export of goods through courier or foreign post office using what, my dear friends? E-commerce. See that line? Export of handicraft items, handloom products, books or periodicals, leather footwear, toys and tailor-made fashion garments through courier. We are sending them through courier or foreign post office using e-commerce of FOB value up to this 25,000 point has been now amended to 5 lakh rupees. For November 2020 exam onwards, it is 5 lakh rupees. Please keep that point in mind. So this figure of 25,000 is amended to 5 lakh rupees from November 2020 exam onwards. Please keep that point in mind. I repeat one more time. In case of export of goods through courier or foreign post office using e-commerce, we will consider only up to a value of 5 lakh rupees. That means what? See, for example, if the FOB value is 5,20,000, for the purpose of calculation of reward, we consider only 5 lakh rupees, even though it is 5,20,000. That's an interesting point what you have to observe. So this is the story of MEIS, my dear friends. Finally, looking at SCIS, a pretty simple concept again. And here, some important point to be kept in mind is that this SCIS concept is applicable only if, in case of individual service providers and sole proprietors, it should be at least $10,000. What? Minimum net free foreign exchange earnings. Why they are saying net free? Because foreign exchange earnings minus foreign exchange expenditures. Net will become net free foreign exchange earnings. If it is at least 10,000, only then you will get eligibility for SCIS scheme. And individual case it is $10,000. Other service providers it is $15,000. And you can see an interesting point. Under education services, SCIS shall not be available on capitation fee, something like donations. And eligible categories, there are some categories which are not eligible. For example, foreign exchange remittances like foreign exchange loans or issue of securities, bonds, GDRs, and earned through contract or regular employment abroad, payments for service received from EFC account, exchange earners foreign currency account, foreign exchange turnover by healthcare institutions like equity participation donations, export of goods, SCZ units, then foreign exchange earnings for service provided by airlines, shipping lines, service providers flying from any foreign country X to any foreign country Y. So they are going from foreign to foreign and not touching India at all. Service providers in telecom sector. Finally, last one, foreign exchange turnover by education institutions like equity participation, donations, etc. These categories are not eligible for SCIS benefit. I'm sure this point makes sense to all of us. Yeah? Now, some interesting point let me discuss with you. One interesting question. In fact, that question came in exam also a couple of times. Yes, see this question. Ninth question I'm talking about. Answer the following question with reference to provisions of duty credit scrip under export from India schemes, a foreign trade policy. First, Rishita provides services eligible for SCIS scheme. She wants to sell SCIS scrip earned by her. Can she do so? 100% answer is yes, because the scrip can either be used for payment of customs duty or the scrip can be freely sold in the market. Second, can a manufacturer, instead of importing the inputs, source the same indigenously without payment of GST? Answer is no. I already told you that the script what we have got, we can use it only for the purpose of payment of customs duty on imports. Third, an exporter was issued duty credit script dated 15th July. What is the period within which he must utilize the script? So let me tell you, my dear friends, the validity of script is generally 24 months from the date of issue. And fourth point, exporter exported leather footwear through courier using e-commerce of value of 24,000. Can he apply for duty credit scrip under MEIS? Answer is yes, because FOB value up to 5 lakhs is considered. I discussed that with you. Come on. First bit answer is yes. Second bit answer is no. Utilization is not permitted for payment of GST for procurement from domestic sources. Third point, very important. Scrip is valid for 24 months. Fourth question, I already told you 5 lakh rupees is the answer for that. Done. Going back to the concept. I'm sure we got good clarity on the concept of SCIS, MEIS, guys. And we already discussed about advance authorization. We also discussed about duty-free import authorization. Now let me discuss with you the concept of status holder. I told you that based on exports, what we do, export performance, what we do, we get status holder recognition. 1-star export house in case of $3 million, $25 million 2-star, $100 million 3-star, $500 million 4-star, and $2,000 million 5-star export house. And export performance will be counted on the basis of, come on, see now. So what are the status holder, guys? For $3 million, 1-star export house, $25 million 2-star, $100 million 3-star, $500 million 4-star, and finally $2,000 million 5-star export house. Next line. Export performance will be counted on the basis of FOB value of export earnings in free foreign exchange. And for deemed export, FOR value of exports in Indian rupees shall be converted into US dollar at the exchange rate notified by CBEC as applicable on 1st April, my dear friends. C point important. For granting status, export performance is necessary in at least 2 out of 4 years. So friends, for granting the status, what is the important point? Come on, see this point. C point, very important. That's what I was discussing with you. For granting status, export performance is necessary in at least 2 out of 4 years. Then D, interesting point. For calculating export performance for grant of 1-star export house, that 1-star is $3 million. Export by IEC holders under the following categories shall be granted double weightage. Number 1, MSME enterprises. Second, manufacturing units having ISO or BIS. ISO, BIS, then units located in northeastern states including Sikkim and Jammu and Kashmir, and last one, units located in agri-export zone. The next point, export performance of one IEC holder shall not be permitted to be transferred to another IEC holder. You can't transfer like that. Hence, calculation of export performance based on disclaimer shall not be allowed. And F point, export made on re-export basis shall not be counted. When I say re-export, that means we are talking about we imported the goods, again the same goods we are re-exporting. That will not be considered. And finally, export of items under authorization, including SCOMET items, would be included for calculation of export performance. When I say SCOMET, it talks about special chemicals, organism, metals, and other things covered there. Let me tell you the exact full form of SCOMET, guys. It covers special chemical organisms. See that? Special chemicals, organism, materials, equipment and technologies. Special chemicals, organisms, materials, equipment and technologies. They are also considered for calculation of export performance. Now, what are the privileges to the export holders? This is also important. A question can come in exam for 4 marks as to what are the benefits available to status holders. Number 1, authorization and customs clearance for both imports and exports on self-declaration basis. Number 2, fixation of input-output norms on priority, that is within 60 days. C point, very important. Exemption from compulsory negotiation of documents through banks. The remittance receipts, however, would continue to be received through banking channels. It's not necessary that you have to negotiate documents through the bank, but you have to receive the money through banking channel only. Next point, exemption from furnishing of bank guarantee, that is bank guarantee in schemes under FTP. Next bit, 2-star exporters and above are permitted to establish export warehouses, but this benefit is only for 2-star and above. Then 3-star and above shall be entitled to get benefit of accredited client program under guidelines of CBIC. Accredited client program is also known as an interesting concept of deferred duty scheme. We can pay tax later, clear first, pay later. We can take the goods first and we can pay the duty later. That scheme is something like accredited clients program. And finally, last point, status holders shall be entitled to export freely exportable items on free of cost basis without payment of duty for export promotion, subject to an annual limit of 10 lakhs or 2% of average annual export realization during preceding 3 licensing years, whichever is higher. This point has been slightly modified. Let's have a look at that. Come on. See this small modification. Status holders shall be entitled to export freely exportable items on free of cost basis for export promotion, subject to annual limit is 2% of average annual export realization during 3 preceding licensing years. But this concept of 2% does not apply to gems and jewelry sector, articles of gold and precious metal sector. But B point, annual limit is 1 crore or 2% of average annual export, whichever is lower. And whichever is lower concept is only in case of gems and jewelry sector and articles of gold and precious metal sector. That's it. So these are the interesting points with respect to the concept of status holder, my dear friends. So in net effect, if you observe, I discussed with you the basics of what is foreign trade policy, and I also spent some time with you about what is advance authorization and duty-free import authorization. We discussed about MEIS, we discussed about SCIS, we also spoke about status holder. Now let me spend 2 minutes of time on discussion about one more small concept, that is about EPCG, export promotion capital goods. That also I'll revise once and I'll close this. Come on. EPCG. I already told you the difference between advance authorization and EPCG is only that in that case, my dear friends, we can import the goods, that is raw materials, without payment of customs duty. But in EPCG is a case where we can import the capital goods without payment of customs duty. That's a major difference there. See now, EPCG permits exporters to import capital goods for pre-production, production and post-production at zero customs duty, or procure them indigenously without paying duty. In return, exporter is under an obligation to fulfill the export obligation. And let me discuss with you the most important point. What is export obligation? Export obligation is 6 times of duty saved on capital goods. For example, if you saved a duty of 1 lakh, then your obligation is 6 lakhs. 6 lakhs money should come to India. 6 lakhs is your export obligation. and that needs to be fulfilled in 6 years, which is reckoned from date of issue of authorization. And authorization shall be valid for 18 months. How much period, guys? Authorization is valid for 18 months from the date of issue of authorization. And import of capital goods is subject to actual user condition till obligation is completed. And once obligation is completed, it can be sold or it can be transferred. So this is a story of EPCG scheme where we can import the capital goods without payment of customs duty, but subject to an important condition that there is an export obligation which is equal to 6 times of duty saved. And that authorization, whatever we get, is valid for 18 months from the date of issue of authorization. That's very, very important. And here there is a concept of eligible capital goods, and here there is ineligible capital goods. This I want you to know. Number one, second-hand capital goods. Number two, any capital goods for export of electrical energy, supply of electrical energy, use of power, or supply or export of electricity transmission services. These things are not eligible for EPCG benefit. Clear, right? Done. So this video was only to make sure that I summarize the whole thing of foreign trade policy, especially with relation to what are all the important concepts in foreign trade policy. What I want you to know is, definitely guys, one is very clear, the concept of what is advance authorization. Second, number two, what is duty-free import authorization? Next, what is EPCG? Then what is status holder concept? Then you also are required to learn what is the concept of MEIS as well as SCIS. These are the major important contents of the foreign trade policy, guys, and one of this will definitely come in the exam. Clear, right? That's it. That's about a revision on foreign trade policy from my side, my dear friends, and wish you all the very best. Wish you all success. Do really well. Any doubts, anytime, feel free to get back. I'm always there for your support. Thank you so much. Take care. Shivateja signing off. Bye bye.